Hej och hjärtligt välkomna till Investor Update. Idag med Christer Lindqvist, vd för GRANGEX, Europas största gruvutvecklingsbolag, eller hur?
Ja, det tycker vi.
Ja, det är roligt att ha det här i studion. Då GRANGEX även vänder sig till en internationell publik kommer presentationen att fortsätta på engelska. Då gör jag ju det nu och så säger jag då welcome to this presentation with GRANGEX and its latest PEA, this one for Sydvaranger, Norway. For those watching live, you can, as always, with our broadcast, interact directly with the management. You will do so via the chat. We will address the questions after the presentation. However, we should emphasize that GRANGEX, who recently moved to Nasdaq First North Premier Growth, will release its annual report on February the 13th. Why today's broadcast and subsequent Q&A preliminary will focus on the result from the Preliminary Economic Assessment and the Sydvaranger mine in northern Norway. So with that under our belt, I will say, Christer, the floor is yours.
Well, thank you very much. Great to be here. Great to be able to talk about Sydvaranger and the recent developments of our study work, the Preliminary Economic Assessment. We, as you know, are, as Carlo mentioned, we are a listed company on Nasdaq, and whatever I mention here is in the public domain. We are a public project developer of mines for the green transition, and we take part in the steel transition of the steel industries. Change into fossil-free steel production. So our project is ultra-high-grade iron ores. We have two projects. We have the Dannemora-project. We have talked about that earlier. You who have watching us, following us, knows about that. And now we have the Sydvaranger mine up in Norway. We acquired that in May last year. And this is all about that study, the PEA, which we presented this morning. We have two assets. Sydvaranger now emerged as the absolutely largest asset when we regard the net present value. It's $1.2 billion worth of the project. And the Dannemora, according to the recent feasibility study, is around $270 million. Totally almost $1.5 billion. And that should be compared then to our current market price around $13 million. So there is as we see it, a discrepancy right now. That will probably, giving the information flow and so on, hopefully will be adjusted. But there is compared to other peer group projects, it should be around 5–10% at least. Having said that, we go forward and focusing then on the Sydvaranger. As Carlo mentioned, we are on the Nasdaq First North since December. We are pursuing now Sydvaranger within the study work and also interacting with the public Norway in order to bring Sydvaranger into operation as soon as ever possible. There is great possibilities for that. We have also a partnership with Anglo American, which is essential for the fast developments we are now onto, and that's a valuable partnership. I will talk a little bit more about that later. And then we have all permits necessary for bring Sydvaranger into operation as soon as ever possible. So it has been a significant developments in the Sydvaranger project the last 8 months during the period we have owned Sydvaranger. And today then we published the PEA study and the highlights there. Everything is on the web. We have published everything, so it's the executive summary is available on site on the web and on our homepage. But $1.2 billion net worth of the project, is extraordinary. It's beyond the expectations, actually. Everything which has been done here has been based on a earlier feasibility study, which was published in 2019. So we have a good foundation from where we then developed our study now, and we will then bring this into a full feasibility study, which will be ready latest in July this year. And compared to the old study, which is targeting also the same quantities, but not the same quality. In our study and in our development work, we have upgraded the product to a full concentrate for direct reduction applications. It is around 70% or above 70% iron grade. Probably one of the best qualities available, will be available on the market once we come into production. We have a healthy internal rate of return of 47%. It is mind-boggling numbers, but these are real. These are signed off by our independent consultant firm, SLR, and we have been working together also together with Anglo, even though they are not signing off on this, of course, but they have been on the steering committee. So it's great news, great developments, good news for Kirkenes and northern Norway, I would say. We have a very good or low production cost, around 55% in the steady state phase of the operations of Sydvaranger. That is very competitive, considering the high grade we will produce. And it's only magnetite we are talking about, magnetic iron ore, meaning that it's easy to upgrade, and that's why we can reach this high grade, 70%. We are planning to start up the activities next year, within 12 months. And that is to get the operation into to the first phase. And we expect to have the first ship leaving early 2027. This is also good news, because up in Sydvaranger, or in this area, there is a requirement for economical activities. And this is what Sydvaranger can bring. It's a big economical motor for the region, and that means also that we have a lot of interest and support from public Norway, if I put it in that context. We are in Sydvaranger, a truly world-class project now. We are proving that through this study. It is confirming that. We have 500 million tons of mineral resources available. We will mine part of that, so there is a lot of extension possibilities. We are talking about roughly 19 years of mine life, out of which 15 years is steady state production with $54 production cost. Very competitive. 3 million tons a year average. It will be reaching 3.6 roughly certain years, and then it depends on where we are in the mine site, actually. We have 8 different pits where we will operate, and we will have, it's only open pit here right now, which means also we can have a combined mine fleet, which is a big advantage instead of having some underground and so on. There has been discussions about that in Sydvaranger earlier. We have the price, which we base everything, is an independent forecast we got from Fast Market. It was Metal Bulletin once, now it's Fast Market. So they given the life of mine, 19-year forecast from 2026 and onwards, which is a variation, of course, over the years. A little bit less in the beginning of the period, and then due to the fact, which I want to talk about, the increased supply demand. We will invest over a 4-year period, roughly $350 million of CAPEX, and that will be done in sequences. So, and all this low CAPEX, which is low in this context, is because there is a lot of investments done already, and we enjoy the care maintenance of the existing installations which we have up in Sydvaranger, from the primary crusher all the way down into the harbor system, or the loading system at the harbor. All these installations are current and they are maintained, and we have a crew up in Sydvaranger who knows everything about it. So that's a big advantage for Sydvaranger compared to many other iron ore projects. Yeah, well, this is a brownfield project. It has a very proud history, all the way from 1906 actually, all the way up to now. Now we are bringing Sydvaranger into the new era of the green steel transition, where Sydvaranger will take a very important role, especially here in Europe. And we expect then, as I mentioned, to have the feasibility study published in July this year. And during the next quarter and so, we will have the project financing established. And we expect to have the production starting early 2027. Anglo American is our partner, is our strategic partner. They are with us in Dannemora, and they are with us in Sydvaranger. And they are supporting us not only with the totally $27.5 million without any dilution for the current shareholders. We enjoy the support, the technical and mining technology knowledge which we have access to through the cooperation with Anglo American, including, of course, the marketing, which will now start up that work actually. As we see now, we see the end of the tunnel of a development, and 2027 early, we will have shipments. So next year is not only talking about marketing and talking to end customers, it's also to building up the organization, the operational organization. That's going to be a very important project also. Roughly 450 employees will be employed in early 2027. So why do we do all this? Well, I talked about the transition of the steel industry. That is imperative to meet the Paris goals, targets, and roughly 7%, maybe more % of the global emissions of CO2 is coming from the steel industry. So whatever we can do to reduce that and bring in new technologies like the direct reduction technologies has to be done. So any project that can be brought into production should be brought into production as soon as possible to meet this growing demand for ultra-high grade. Because it is not, iron ore is not one product, it's several products. It depends on the quality of the content of iron and also impurities like silica and aluminium. And this graph is showing this. This is the world market. Roughly 2.5 billion tons of iron ore per year is moved. In the green section at the down right, that's where you have to be a part of this green transition and providing to steel industry. And Dannemora, we brought in there already 2021 we could see that when we had done our product development and process development. The same thing we will do with Sydvaranger now, and now we know we can do it. So 2027 we have Sydvaranger coming into production, and within this exclusive segment in the iron ore market. This is the Premier League of the iron ore market actually. And we have 2 projects in this league. So, and Dannemora we expect to be coming on stream somewhere beyond 2027. And there is a large deficit here. 7% of the entire production is coming from this segment. This is where the growth will be. We are talking about a very high growth every year going forward because of the green transition. All the projects which are now in developments, like Stegra, H2 Green Steel earlier. We have a hybrid, it's supplied by LKAB, but and we have another, I would say, more than 30 projects in Europe only. And there is things going on worldwide also. And all requires ultra high grade iron ore. Sydvaranger is therefore one heck of a project actually in this regards. And we expect, if you look at the right side there, DR grade pellet requirements. This is coming from external sources, but it's an uplift of the requirements up to 2050. So the demand is growing, and this is where you have to be in this segment, the Premier League, to actually be a part of it, but also be profitable. So with that, I think I stop, and maybe we could talk a little bit.
Yes, so let's just dive into Q&A. I've received a couple of questions here, and we will try to manage the questions so that there is some sort of red thread here. Let's see here. We have one question regarding CAPEX. How big of the CAPEX for the alternative B do you expect in this?
Oh, yeah.
And also, may I just add, will there be any financing through, let's say, a profit here?
Well, I mean, if you start with, during the study we had 2 options. The fast track low CAPEX alternative or option. And then we have the alternative B for base case now.
Yeah.
This is what we are going to go forward with. And that is almost $350 million. That will be invested in segments. Roughly, I think we are not disclosing how much yet. It will come in the feasibility study, but we will start small and then do gradually investments during the first 4 development years. And thereafter we have then 15 years of steady state mine production. The last investment, which will come, let's say, year 3 and 4, will uplift the capacity. So we start with the current capacity we have installed in the existing plant, and we will install a new crusher station and then also release a lot of extra ore which is now blocked under the current crusher location. It's so we will get another 35 million tons of ore. So that is the benefit of the expansion, but we get also a longer same life of mine, but much higher volume. So we will produce roughly 54 million tons of concentrate compared to option A, which is around 32 or something. So it's a big value creation we do by investing a little bit more.
Okay. And when it comes to the project financing, do you expect to, let's say, formalize that Q3, Q4 2005, 25?
Yeah, I mean, we actually have commenced this. We are talking to, let's say, public agencies in Norway already. There are financing opportunities. We are talking, warming up the larger investors and let's say financial investment houses in let's say internationally. We contact all the PE houses and so on. So we know that there is a big interest actually. So we are getting to start that now after the announcement now with the PEA.
And I can see there are a couple of questions coming in, which is more detailed on Sydvaranger and so on, and we'll get to those at the end here. But I'd just like to start to ask you the preliminary economic assessments that came more or less on time, as you have estimated. Was the result as expected? Are you happy?
Well, it has been a couple of a week actually. We were supposed to announce it last week. I promised that. I think when I was here last time. It took another week, but I think that was, I mean, that week was very important actually to bring everything together also. We knew, I must say it's astonishing, astonishing numbers. We hear that from our partners also. It is fabulous actually.
Okay.
And I should say that within these calculations we've done now, we have more than 25% contingencies. So because the level of the PEA have to require 25% or more. So that is annoying, but that's what we have to live with. But it's also the opportunity to really optimize further into the feasibility study.
Okay. And obviously the feasibility study is expected to come on stream on what?
July.
In
July.
Yeah. And if we then go back to the reason for this broadcast, which is the PEA, will that make any adjustments to your overall production estimates for the company as a whole? And if so, why?
Yeah, well, I mean, we have been talking about GRANGEX 5.0. We probably have to reduce that a little bit. And it's because 1.1 million tons from Dannemora and then roughly 4 million or 5 million tons, 4 million tons. So that now we are talking probably about 4, I don't know, but it's 4 million plus. But it's higher grade, better price.
Okay.
Less tonnage to ship, and that's also a benefit.
Yeah.
Price-wise and cost-wise.
Yeah. And just for my, in my humble knowledge or lack of, the independent assessor here, SLR, in the study, have they made an assessment of the iron ore price over the lifespan? Because they have given you a lifespan and also an amount of how much there can be. So when I look at this estimates that they are having of some 13 billion Swedish krona, is the iron ore price incorporated into that on average over the life length?
Yes, I mean exactly. The net present value contains it's derived from the financial model. So we have a net present value, and that's typical in a standardized way of presenting mine projects with a discount factor of 8%. It's based on a estimated forecasted price. In our case, it's more than only one average price. It's actually a yearly price over the life of mine, 19 years. So it's more accurate, I would say, accurate in the sense it's still a forecast. But it's done by one of the most prestigious houses who is also publishing every day the indices, the prices for iron ore, which is then used by the industry for calculating contract prices. So that's why we selected them,
Okay.
because they have a very good knowledge and also forecasting history.
Okay. And if I look at this report also, and I have to express my lack of knowledge here, but operating cost is estimated at 597 Swedish krona per dry metric ton DMT.
Yeah.
So what is the difference between a normal ton and a dry metric ton?
Yeah, when we ship, we will ship a wet ton, meaning it will contain roughly 6 to 7% water or humidity.
Okay.
And you are only getting paid for the dry tons.
Okay.
So in every wet ton is actually 93% dry tons. So that's why. But the standard is to calculate dry tons in order to offset the water content or the humidity in the product.
So the end product, more or less. And 597 roughly Swedish krona. I think you on the slides were quite happy with the cost side there. So you're a low cost operator in that respect. Is that true?
I would say, I mean, given the circumstances and if we compare with our peers, we are definitely a low cost, very competitive.
Okay.
Probably.
And what is the ingredients there? How can you be a low cost?
It's probably because we have virtually no logistic cost.
Okay.
I mean, the mine is 8 kilometers away from the plant and the port. That's a dream for any iron ore producer. And we own our own railroad also.
Okay.
So there is no congestion on our railroad.
Okay, and it's an open pit?
It's open pit, which means it's easier than and less costly than an underground. So that's also an advantage. And of course, then we have an ice-free harbor also. We can ship right now with Panamaxes. There is an expansion opportunity to do Cape-size vessels also, but then we need to invest a little bit more in the harbor.
But basically, the harbor as it is now is well fully functional for what you have. So I have a question here from Kirkenes, and they're more focusing on, let's say, on the rest product when it comes to the crusher or separationsverken. So how are you going to deal with that? Obviously, if you live in Kirkenes, you would probably have at least, if not an opinion, so you would like to know.
I mean, we have, and that is one of the parts, I mean, we have very high ESG standards in what we do. We are a sustainable mine developer. And the current technique to deposit the tailings, the rest product from the upgrading of the ore to a product, is according to the permits allowed to be deposited in the fjord outside the plant. And this is the current and predominantly done the way it's done in Norway today. Several other mines also, and this is what Sydvaranger have been doing since I think the 60s or something like that. So but we are investigating alternatives.
Okay.
And this is a part of the permit to investigate and to see what is possible. We are using the best practice, of course, when it comes to this. The best solution is, of course, to find a use for this, because it's pure silica. It's actually beach sand, basically. It's no condiment. It's inert beach sand. And we could actually sell this to other applications like cement industry and so on. It's yet a little bit too early to assess this because it has to be economical, sustainable also. But we are working hard, and that's a part of the feasibility study, the end study now in July, to be more more specific on this. We are not so specific in this PEA actually, but this work is ongoing.
Okay, and while we're on these topics, could you describe a little bit here, particularly for us now in Sweden, the difference between your relationship with, let's say, the Norwegian state, the municipal, and the environmental agencies there? Because I think we touched upon that a little bit when it comes to Kirkenes.
Yeah, I mean, I must say, being a mine developer, being in Kirkenes and in Sydvaranger project, it's a very, very good cooperation. There is a good support. There is, of course, interest which has to be aligned, but there is no whatsoever, let's say, counterparties which is objecting, which is very important for a project like this to bring it into operation soon. So the relationship with the local government, the local community, and so on is excellent. Also, I would say, I would stress that we also enjoy and are very, very glad for the good cooperation with the Sami community also. So that is important for us, and we, all the stakeholders around the mine, is our partners in that sense. When we come further to the region, I mean the Finnmark region is of course just waiting for the mine to come on stream. It's very important for the local and regional economy. I mean, we will produce and export and generate export revenues over a long time, which is also yielding and creating a lot of side effects in the region, and especially in Kirkenes, which is needed actually, because of the situation close to the border and the effects of the disappearance of the border trade, which was very important for Kirkenes before the sanctions.
All right.
And when it comes to the government in Oslo, the national government, the support from the government and the national agencies are very, very positive. And there are more finance opportunities and possibilities in Norway for mine projects, green mine projects and green projects than in Sweden. And that's extraordinary, I must say. But Norway is probably the richest country on the planet.
Yes. So basically the Norwegian state has a program where they financially can help miners such as yourself in this case.
Yeah, there is programs and we are a part of those programs.
Yeah. And energy, which has been a subject for Dannemora and for Sweden in particular. If we look at the difference there, do you see any problem with the energy supply? Or?
It is. I mean, in Dannemora it emerged as a problem. It was not regarded as a problem until all of a sudden we were enlightened. I mean, it's very, very irritating, I must say. But in Sydvaranger we have all that agreed and confirmed by the network and the utility, local utility, as well as the state utility. So we don't have that risk in Sydvaranger. And that is also one of the reasons why Sydvaranger will surpass Dannemora in production start.
And when you look at the future going forward here, is there a need for a cash injection, going to the market with a share issue and stuff like that? How much can you elaborate on that?
Well, we are in a silent period, as you mentioned, but I can say that, I mean, and we said that also, we will need, of course, financing of Sydvaranger. And that process is now starting with the publication of the PEA, actually.
So basically, that's a seal of approval.
Yeah. And then the question is, will it be in the topco GRANGEX, or will it be in the subsidiary GRANGEX Sydvaranger? It's yet to be seen.
Okay.
Yeah.
And obviously you have an illustrious partner here, strategic partner, Anglo, whom I'm sure you are in discussion with on more than one topic.
Well, yes. I mean, it is published also that Anglo, who is, I mean, their predominant interest in this is, of course, to take off the entire production we have, which is roughly 54 million tons, something, over life of mine. It's a value of more than 70 billion NOK, or Swedish krona, which is extraordinarily large amount, giving the numbers in the PEA. They will, in order to have this access, the offtake, they will participate with $50 million in the project financing of Sydvaranger. So part of the 350 will, if we are successful with the feasibility study and Anglo is still interested, which they will be, I guess, having 50 million there already. As a potential financing.
Yeah, and just to clarify here, basically they have an off-take agreement with you, which means whatever you will bring up, they will buy.
Yeah.
At a, let's say, at the market price.
And this is important, and we have a signed off-take agreement, which is subject to this participation in the project financing. But given that happens, we have all that in place already, and that is also a very good formulation of the price calculation, which is a benefit for us, but also for Anglo. But it's a very well-balanced contract in that sense, which can live over the life of mine.
Yeah, well, they seem to be happy, and you seem to be happy with that.
Yeah.
Before we wrap up here, I will re-emphasize a question because maybe I've got it wrong here. So this is the CAPEX question here. So how much of the CAPEX for startup alternative B is expected to be financed through profit generated during the first 3 years of operation under alternative A? I was under the impression that you were going for B rather than A, but
yeah, but I mean the question is actually correct, because alternative B, the base case now is the option A is actually a part of the B, because that's the first phase of production. And it's true that part of the first 4 years we will be in production. We will generate the cash flow, which will partly then offset the CAPEX need, the investment need, so we can finance that through own cash flow. But we will come back to that more in detail. But that's why also we want to bring the operations into the production into operation as fast as possible. And it's also another thing. It's a matter of economical activity in Kirkenes, in the region, as soon as possible. Okay. It's important for everyone, not only for GRANGEX and the team we have, which I must say is a fantastic team in that sense. It's the knowledge we have around Sydvaranger is fantastic, good, and the engagement and is. From all parties in GRANGEX team is, I mean, yeah, I'm very proud, I must say so.
And that's an excellent segue into the last question here before we wrap up. And this is also, as I understand it, from Kirkenes, or in the local unity in Sydvaranger. So they basically they're basically asking if you will, well, put your money where your mouth is, because they've been around for a long time, and this is a mine that has been around. So what reassurance can you give the local population that, you know, you're here to stay?
Well, we must say that our ability to get this into an execution phase, to build it and take it into operation, is better than former owners, I would say.
Okay.
And this probably because we have an integrated team. I mean, up in Kirkenes and the GRANGEX team together cooperate and bring this into. And we have also the project financing knowledge. We have the project execution knowledge, which we normally don't have within a company like us. We have that. So we have taken all these, let's say, critical aspects of getting into operations seriously and not just saying that this is something we will fix later. We know how to do it. So that's the commitment I can say. We will do whatever it takes.
You're confident?
Somebody said that also, but we will do that.
Yeah. You're confident, and that's good to hear, and it's reassuring, I think, for everyone up in Finnmark. What is the next news flow coming from you?
Well, I mean, we have the quarterly report, the Q4, or the year-end announcement, which will come in February 13th. Well, it will contain information around what we have talked about now, also as activities after the year end. We will have a lot of activities during this year. I mean, the feasibility study is to look out for in July, latest, I would say. We have the AGM and the first quarter report, which will also contain information. And we will give that's the plan, to give continuous, not continuous, but regular updates on the progress of Sydvaranger, but also on the Dannemora, of course, if something will happen there. And that is, in Dannemora, is the major task right now, is to get the power commitment from the utility, actually.
Right. Well, Christer, it's been an absolute pleasure, and one should really watch this space, I think. There's more news to come, and it will be very interesting to see the development here. So thank you for coming.
Thank you.
And we will say thank you to all you listeners, and particularly those who were forwarding their questions. Thank you, and we'll meet again. Thank you. Bye.